Okay, this is Daniel Rowe with TradeThePlan.com. This is really part two. The first video I just uploaded on a crude oil short setup from today, January 5th, 2023. And I was talking about going over another short setup in the S&P E-mini futures, S&P500 E-mini futures. So this is that video, so part two. And you can see the short setup here, which lined up pretty well perfectly across multiple charts. And like I said in the first video, I missed both of these because I was working on other stuff, documentation. So let me just run through this really quick. We've got the 138-minute chart, and you can see we've been coming down in 5 waves to the bottom of that channel, which is really this channel. We've been finding support on that for a while. I mean, we had 5 waves down into that channel. As you can see, pretty nice, clean and clear 5 waves down. And then this overlapping sideways pattern, almost looking like a triangle. But not sure if we're going to get one more push up or just keep coming down. I think we're going to keep coming down. But anyway, yeah, the hourly chart, then we found resistance on, this is maybe not the cleanest downsloping channel. I'm using the lowest closing price here and the highest there. But we've definitely found resistance, and it's been coming down. So now on the 30-minute chart, that upsloping lower median line is the other major area that's been providing support for these 3 major lows, third of which was today. And then we did turn up off of it again and pulled back into the midline of this downsloping channel here, high to high, and then dragged it back to that low. And then we came right up to that midline, barely missing this downsloping channel, but then that downsloping channel on the tick chart was perfect. Right here. Boom. Low to low, and then the high right there. So back to the RTH chart, I'm just connecting that high to the high before the close yesterday, which you can see better on the 1-minute RTH chart. I'll show you that in a second. And then the 10-minute, you can see we barely missed the top of that channel, but like I said, we smacked it perfectly on the tick chart. So now on the 5-minute, 2-minute, and 1-minute, 5-minute, that's that downsloping channel. It's the midline that we found resistance on. And then at the end of this move, we had bearish divergence. It's a setup on the 5-minute chart. So the 5-minute chart is the operative time frame as defined by this logic manager that looks for these ABC style corrections and identifies them and then marks it in the lower panel here with the divergence analyst. So we've got volume divergence there, bearish momentum divergence, volume divergence on the 2-minute, bearish momentum divergence on the 2-minute. And then from the 2-minute down is where we're starting to see the volume signals. You've got that high density climax into the areas. I'm connecting these 2 lows together. That gives us this slightly downsloping channel that we smacked right into, and then the upsloping channel low to low, parallel from the high, and then we nailed that perfectly. And that midline was giving us good resistance in here and support before that final high. So that's obviously a nice working channel. And then we came right back down to it, to this trend line. Now on the 1-minute, you can see how I'm connecting that trend line that I had on the 15-minute. That's just the high to the high before the close yesterday. And then that aligned with our swing high today. Here you can also see the fib confluence zone that we had. It's 100% the size of this swing to 52.50. And then 161.8, the size of this swing from the low here, 53. And then 61.8, the size of this swing, these 2 swings. So a nice tight fib confluence zone there as well. And everything just lined up beautifully. And then you've got your big high density extreme climax closing off the high. And then the same thing on the 2-minute. With volume divergence, really big volume divergence actually. And then now on the tick charts, Again, perfect hit of that downsloping channel, as you can see here as well on the tick 1, and then that downsloping, slightly downsloping channel here, and then the upsloping channel there. So they all three align just perfect for that swing high. And then we traded right down to that previous low, the low after the open. So we came straight down to it. Now I would have taken one off for sure right there. Absolutely. But your stop, would not have had to have been very large at all. Let's say we got in a little bit late and then had a stop just beyond the channel, about 18, 20 ticks, let's say 20 ticks. And then we took one off there. Let's say we just took both of them off right there. That's still a 4-to-1 R multiple. It's pretty nice. It's really nice to just get a little chunk out of some of these moves consistently. It's the way to go. So then on the row charts, you had that 2-bar pattern on the row 1. Beautiful momentum divergence. And then that big churn bar on the row 2 with momentum divergence and volume divergence. So that's it. And then we traded down. Like I said, I definitely would have taken one off here. You had a nice cluster of volume signals at that low on the row 1 at least. And then that fat extreme density, extreme churn bar on the tick 1. All right, I'm going to wrap it up there. Bye for now.